Okay, everybody. We have Karen with us now, and David, who's generously hosted this meeting. And last week, David and I had a great meeting with Karen. She gave us a lot of insight about situations that are unique to him, but have many other talent representatives in a similar situation. And then just a lot of great information in general about dealing with the taxes of the situation, what you can and cannot include, things like that. So we thought it would be very beneficial to open this up to others. Karen, all of these people represent some form of a talent representation situation. And David has had time to think about a lot of the things that we digested. So Karen, I think it would be helpful to them if you could just give a moment about your background and how involved you are in this grant program.
Sure. So I'm a partner at Witham Smith and Brown, and I run the I'm co-director of the Theatrical and Arts Division. And for about 35 years, I have worked as a CPA doing audit, tax, but also a lot of consulting with nonprofits and commercial entities that do live theater. So I handle people like the production companies of Wicked or Book of Mormon. I handle about 75% of Broadway and the tours. And then I also handle nonprofits. So I also handle like Roundabout, Second Stage, people like that. I also handle regional theater, so like Goodspeed or Trinity. So I've been in the theater business a long time. I'm very involved with the league as well as with Department of Cultural Affairs and stuff like that. I also do commercial work, right? So I do S Corp, C Corps, and individuals, but they all are tied to the arts. So I handle a couple of theater talent agents. I handle, talent themselves, things of that nature. So I sort of touch everything that's theater based from that perspective.
And your specific involvement so far with SVOG applications?
So I go back, so my partner and I, he's tax, I'm more audit and accounting and things like that. He's like international tax structuring. So we've spent a lot of time with the league and with Schumer's office writing tax legislation over the years for various reasons. In any case, so when COVID happened, what we had suggested was that we wanted to get people, both commercial and nonprofit theater people, back their income that they had to return. That's how it started back in April of 2020. Believe it or not, it wasn't called SVOG at the time, but we started getting involved with, so that's why the gross revenue, it's calculated on 45% of your lost revenue, because my attitude was I started out with the tickets that had to be returned, but yet everyone had costs. And then we added on everybody else, producers, talent agents, museums, but it started with the basic theater people who had to spend all the money on the production cost, then turn around, return all the advanced ticket sales. So they were like a double whammy. And then we've been involved ever since. It's been a long road. I hate to get political, but my partner went to a meeting, I guess about 2 years ago, and met with the Trump administration tax people. And so again, I'm not trying to be political, but basically she looked at him and said, you're not going to get any legislation passed for the theater world. The current administration will not look at anything having to. So that's what we were up against from March shutdown through December 31st. So it was not fun.
Yeah. So thank you for sharing that, because I think it's helpful for people to realize that she's been involved since the inception. She's still involved with all the SVOG team members at SBA, and very involved in their interpretations of FAQs and things like that. So we are really honored that you're also helping us.
Oh, yeah, of course.
Of course. So I'm going to hand it over to David to see if you want to start with some questions.
Well, yeah, I guess I would start with a couple of broader follow-up ones from our last week, this early Monday's conversations.
Yeah.
Blur. Anyway, I think one of the key questions that sort of emerged, and I've talked with a couple of, actually Robert on this call and a couple of other folks, one of the key questions we're sort of circling around, I think it may be fairly obvious, but we'd love to know your take on it. If we were to go ahead, I mean, I think a number of us are starting to lean towards, look, let's write a budget for the maximum amount they're awarding us now, and kind of worry about it a little bit later when we get some clarity to these questions, which, you know, you and I on Monday decided we can make our best guesses, but we don't know how they're going to rule on owner, you know, distributions of compensation, how they're going to rule even on whether or not we can pay our talent for canceled shows. Obviously, you and I both think we can, but that isn't, you know, that hasn't been resolved, right? I think SBA hasn't ruled on that yet. So, you know, the fact that we don't know that, and the fact that I'm personally facing a 8 p.m. deadline tonight, my first of 3 deadlines, it was for the same action item, to put in a budget. I'm not actually planning to do that. I hope, Nina, do you have an opinion on that? I remember you said a while ago that these deadlines.
Referring to Karen, and maybe you know something about this. The SBA has automatically, for those coming close to their deadline for submitting a new budget or a technical revision of some sort, they realize the automated system made too short of a runway period to respond by. So they reissued same request for the same thing, same deadline. And David's asking, are they going to make me, am I going to lose anything by not responding by the very first deadline that they gave me? Or can I rely on the second email that they sent me that gave me a 2-week further extension?
So my answers, unfortunately, are never black and white with these things, because this whole process has not been black and white, right? So I was on the phone with a client this morning, and they had a deadline of July 16th and July 21st for the exact same form. And SBA did not delete the previous one. And they have 2 different reference number, but it's the same form. So I said to them, why wouldn't you just submit it today, get it in before the 16th, put it in, enter it twice. This is a government agency. This is the stuff that makes me crazy. It's not step back and look at big picture. It's you didn't complete that form and it was in there for that date. Mm-hmm. That's what makes me nervous. That's what I've run into for 30 years with the government agencies. The form wasn't filled out. Box 7A was blank. But meanwhile, we don't have so many other more important questions answered. This is what they focus on. And I have to be honest with you, I'm a CPA, I'm an auditor at heart. I don't trust verbal anything anymore with the SBA, especially because the administration's changed. I could be wrong. Not that they're not lovely, and they definitely try really hard. It's just been one inconsistent thing after the other. Think of how much time you spent. I know I spent hours and hours with every one of my clients on the priorities, 1, 2, and 3. Thrown out the window, didn't even mean anything. So it's just exhausting. And I don't want to be negative because this is a great thing. But one thing I've learned, I would submit the budget in both of those queues. You can always do a budget modification. You can, and a budget modification in my career, if it's a reasonable one, they don't even blink. And they give it to you, and it's plus or minus 10% on any line item. You're allowed anything under plus or minus 10%. You don't even need to do a budget modification. So I would do it just because I'm nervous about all of this stuff.
Right, but if I'm not quite ready, like if I've been working all this stuff, you know, and here's my deadline tonight, and I probably could do it. If I guess it'll depend a little bit on how a few questions go today. One of the key questions again is, so I'll return to this one, and I don't want to monopolize the session here, but I think one of the key questions is, can we take all the money we're being offered right now, assuming we write a budget, you know, that they approve? I understand they need to approve it, but assuming we write a budget that they approve for the entire amount of money that they're offering us today, is there any reason not to do that? And will we be able to return, you know, any amount of it, sort of along the lines of a modified budget, but maybe this is a little bit different. Like let's say I took 100% of what they're offering me, and then in, I don't know, 4 weeks from now, you know, we get some clarity on some of these questions. I realize I am not going to be able to spend 100%. I'm under any circumstances. I don't care how they reallocate things or whatever. It's not going to happen. Can I then just go ahead and send back, you know, 30% of it, you know, and that's fine, like no questions asked? I mean, that's sort of, I think, a key question, at least for me today.
Yeah, I definitely, I've been recommending that to sign the grant letter, do the amended budget, and then let's wait and see. And because I have had tons of clients that have gotten higher amounts than they applied for, and SBA, and we email them and they respond pretty quickly, and they say, no, you calculated it wrong. I'm like, okay, and they say, so, but my attitude is you're going to wind up dealing with the program officer once this all starts getting rolling and they finish the application process, which in theory is supposed to be July 31st. So then we can get down, I figure in September, to be honest with you, we all get down to business on details.
Okay.
And then worst case scenario, you just be prepared to return the money if you have to.
Okay.
And interest. Well, interest right
Yeah.
now, who's earning anything on interest?
Yeah, but
Right. I mean, 1%, what's the going rate? So
Right.
I'm not so concerned about it in this right now, because again, there's just so many unknowns. And let's specifically talk about your industry, right? We feel that because we have return tickets, that's an allowable expense. SVOG has also said, if you had an employee that made $75,000, but you were only paying them $50,000 during COVID because you couldn't afford it, and they were still providing services, you can cut them a check today for $25,000. So I say to myself, well, is that any different than a canceled contracted performance? Same thing, I have tours where the presenters lay out advertising and expenses. If you cancel a tour, the producer has to reimburse the presenter for those advertising and reimbursement costs. These are all have been in writing from SBA. So it's not on point exactly to talent agents, but that right there is 3 examples where I say, well, how is it any different? One example, you did have to cut the checks to return it, so you had to put out cash. The other 2, you're giving the cash now. And in all 3 cases, they said, yes, those are allowable expenses.
And we're hoping they do know we have this question about our talent, right? Like this is a pending question, I trust, and hopefully a future FAQ will address it specifically.
Yes.
Yeah.
That's my understanding.
Right.
Aaron,
Right.
just, I have that specific question into Deidre and Katie.
Oh,
and
good.
Be responding any day. I thought they were going to try to do it before this 4 p.m. call, but it's going to be with today or tomorrow.
And again, I think it's personally, I think it's a great thing because an artist could not apply on their own, right? So they're not going to get that money and they didn't get paid. And so that, now I'm not going to get into unemployment and everything like that. That's not our job, but typically independent contractors, right, aren't on unemployment because they own their own company. You can't get unemployment for an owner.
Right.
That's generally speaking, but there are other people, if I am William Ivy Long and I have an S Corp, that S Corp cannot cover unemployment for me. So he would be the person in that example that you're giving this check to who we know couldn't get unemployment.
Right.
So that's even more of my argument that most of these people weren't collecting unemployment. Now, if they were, that's none of your concern as a talent agent, by the way.
Okay.
That's their concern.
Yeah, and I wanted to follow up on that's a very along this line. If I understood correctly from Monday, I think you were of the opinion that not only do we not need to be as the agent, as the pass-through entity for these funds from the government to our artist clients, okay, essentially that's what we would be doing, and as what we're describing, that you were suggesting that we certainly don't need to be worried about any employment they may have received, but also likewise for PPP and even SVOG if they got SVOG. I think I heard that right, and that's one I've been kicking around in my brain for a few days, because what I was trying to imagine is, let's say one of my string quartets applied for a PPP loan it doesn't matter when, but let's say in June of 2020, and they cited as their reason, lost income, and the lost income is basically the income they get from me, the touring income. They also have their own residency position, which didn't go away. They had that money. So the money they lost, by and large, was touring revenue that got canceled, as we've been talking about. Okay, fine. So they apply for PPP loan, they get 2 months worth of whatever they got, how they did. The money they paid themselves out of that loan was clearly designed to mitigate the losses that they incurred during 2020.
I'm going to interrupt you. So
Yeah.
on a PPP, you had to be on salary. It had to be W-2 wages. No PPP could go to independent contractors. Absolutely not.
Unless the independent contractor is the one who applied for the PPP.
But the
Right.
only eligible expense was payroll.
Right, but that's what I'm saying. That's exactly what I'm saying. So they applied as, you know, an entity. It could be individually. In some cases, it could be as a group. It wouldn't matter. And then they paid themselves. That's what they used the money for, was to essentially for payroll. Just like I did. I did the same thing. I applied for PPP. I got it as a sole proprietor. I paid my W-2 employee, Ariel, on the call here, and I also paid myself what I was allowed to pay by PPP. So they did the same thing. So they paid themselves through PPP for these canceled events. They certainly didn't make up anywhere near 100% of it, but they would have made up some of it. So the question is, if I now am going to go back through my whole list of canceled engagements and just ignore whether they got a PPP or not and say, okay, here's the 2020 canceled engagements for XYZ Quartet, and I am going to pay you the money I would have paid you had you played these concerts, right? Okay, it's going to be, you know, I'll do the calculation, doesn't matter how I do the math. Or I'll pay you some percentage of it. It might not be the entire thing, it might be 45%, but I'm going to pay you for it. This is the question. Is that double dipping? Is that a problem where, you know, potentially for them, not for me? I get that it's not my problem. That I get. But I'm also concerned about my clients. I don't want to walk them into a fraud investigation, you know, like, right.
But it wouldn't be.
Okay.
It would be on your end if that was an eligible expense. Nowhere in any of the literature have they said you can't give to an independent contractor $100,000 if they got a PPP1 loan or two, PP1 or two.
Okay, all right.
And all throughout the FAQs, right? They say, because in their minds, independent contractors couldn't apply to PPP 1 and 2. You had to only pay payroll. So the IRS makes a very distinction on what they call an independent contractor versus payroll. So
Right.
that's the first thing. So
Could
in
I
your
interrupt you for a moment? Because you said independent contractors couldn't apply for PPP. They can apply for a PPP. It's the person who got the PPP, they can't pay independent contractors.
that's right.
Right.
So they had to pay a salary.
Yes.
Right? So that's why I'm saying to you, I think what we're doing is we're thinking, David, you're thinking of yourself as double dipping, but they're not double dipping because you're paying them now, by the way, taxable income.
Yes.
And it's for a canceled contract. I truly believe you have to have a canceled contract with an amount in it. And
right.
As we talked about, you also have to get an assurance, if you don't know already, that whoever you're paying, if you're paying them over $100,000, they have to have more than one employee. It's limited to 100,000 per head count. So in our example, we talked about the easy one is you sign a contract for an ensemble to perform in Chicago. Typically an ensemble contract would say there's going to be 5-piece orchestra or a 5-piece ensemble. Normally in the contract, right? It usually says you're going to have, and it's detailed. Not every independent contractor does. So usually your contract says, oh, it's going to be a 5-piece. You could give them $500,000, right? Other contracts, most contracts are silent. You hire, anybody, as I always use the example because I'm in the theater world. I hire a talent agent, right? So Bernie Telsey is hired by all my shows as the casting agent, right? A little different, but you know what I'm saying.
Mm-hmm.
So now I got to go to Bernie Telsey Company. And before I can cut him a check more than $100,000, he's got to represent to me that and now, by the way, I'm not just giving him, oh, you have 5 people who work for you, here's 500,000. I'm giving him what the contract amount says. So his contract says 250. He's got to represent to me, he's got more than 3 people working for him. I can give him 250. You can't bump anything up for SVOG that wasn't already contracted previously. That's the key. That's where people think, oh, I can bonus this out. I'm like, no. SBA made it very clear this money is not to be bonused out. It is not to pay the differential between unemployment and what they would have been making. they were not working, they were on unemployment, if they represented they weren't getting any other money, you can't do back pay with this money. You can use your own money, but you can't use
Yeah.
SVOG's money. Yes, Martha.
So thank you very much. This is all super helpful. It sounds as though we ought to be waiting. If I go ahead and say, sure, this extra, it was 4 times the amount of what I understood I was able to get, right? So I make a new budget. I show all the amounts of money that I want to pay the artists with the contracts that were canceled. But I maybe shouldn't be paying this until after September when we've all watched
Yes.
what's going to
Yeah.
happen, because I don't want to give
Yeah.
this $10,000 to this,
To-
and
to-
then
you'll never
I'm
get it back.
buying
Yeah.
it
Right.
back from them. That's like, I need to protect them.
Absolutely. So if you have to cut a check on December 29th, if that's what it takes for your industry to feel
So
comfortable,
That
you're
was
not
my
getting,
question.
because you're
There's
on
a-
the hook. Yes.
So there's
whoever-
a deadline for using this money, and the deadline is
So
the end of
here's
this
the thing.
year?
Yes. So what happens is currently, this can change. Currently, the expense has to be incurred by December 31st, 2021, and physically paid by March 30th, 2022,
Not
in
June-
order to be eligible expense.
Not June 30th?
No, they haven't issued any supplemental grants. They have not issued and the supplemental grants, but so here's the fun part. Under the act, which is law, which SBA cannot change unilaterally. Okay, under the act, this is round 1 and expires December 31st, 21. Supplemental grant extends it to June 30th, 22. They have not issued any. Where they keep messing up, your grant letter, project dates and budget dates are wrong. They should be blank. For about a month, they were issuing them blank because I had a fit. It was like, don't tell me the grant starts on July 15, 21, because I got my grant letter today. And under, just so you know, the reason for this, they're not wrong in a sense in that the federal government terms and conditions says no federal agency, Department of Education, Department of Housing, SBA, NEA, none of them by federal law are allowed to reimburse for a prior expense prior to the grant issuance. So SBA issued all these letters saying, well, I can't date it because I'm not allowed to under federal law, but we're going to tell you in writing it's fine. And I'm like, no, that doesn't work. So the clients who got the project dates and the budget dates and they're wrong because it's March 2020 through December 31st, 21, when you send back your amended budget, attach a little letter saying the act has eligible expenses from March 2020 through December 31st, 21. So you're putting them on notice. I'm telling you now, this is my don't use the word project dates or budget dates. Just say the act has eligible expenses from March 1st, 2020 through December 31st, 21.
Okay. And sorry, well, this will be, I think, my final question. I want to open the floor to others, but it won't apply to everybody. It might apply to at least one person on this call. If we are in the realm of being required to submit to the single audit, okay, because of the amount of money that we're discussing. But if by spreading the expenses over 2 years, so 2021, we're in that year, right? That's our current year. We can spend some of it. And then assuming the supplemental comes through and extend it through June of 2022, is it possible, in your opinion, to simply be very flexible with what we pay when? So even if it was an expense that was incurred in March of 2020, if the payee, whatever you want to call it, if it's my artist and they say, David, don't worry about it, pay me in 2022, that's cool.
Right. Yeah, no, I have been doing this again for 35 years. There's nothing illegal about trying to split, because many times the grant period doesn't equal your fiscal year.
Right.
So I've had hundreds and hundreds of nonprofits who, let's say, get $1 million grant. It covers calendar year, but their fiscal year June 30th. They spend 500,000 in one year, 500 in the other, and they don't have. And by the way, it's called a uniform guidance audit.
Okay.
That's the current language since 2018. Yep. I'm picayune, I know.
Okay. But
On the video of 2 awardees, it specifically says if you are a for-profit entity, which all of these people are,
right.
you are a for-profit entity, you can choose either a single audit or audited financials. Can you explain the difference?
Sure. So I'm a little dramatic. I do deal with theater people. You're suicidal if you've never had a GAAP audit. Do not choose a GAAP audit. So a GAAP audit, generally accepted accounting principles, because you can do a GAAP audit or a uniform guidance. It's that.
So audited financials is GAAP audit.
Yes. And they even say a GAAP audit or a uniform, right? So GAAP.
Audited financials.
In the FAQ somewhere it says it. But anyway, it doesn't matter. That's a GAAP audit, right?
Okay.
We have to audit. I'm the CPA, I'm an auditor. I got to come in and audit your balance sheet. Since you've never been audited before, I have to audit your balance sheet, opening balances, ending balances. And I have tons of clients in this situation. And I'm like, I'm never going to be able to issue a clean opinion because you've never been audited. I've got to look at your assets, your liabilities. It has to be on the accrual method of accounting. A nightmare. So for the people who have never been audited before, I'm saying to them, so much easier, so much cheaper, do a program specific audit under the uniform guidance, which means that they will only, your auditor will only audit this grant. Now, the fun part about it, the federal government has been like this in my 35 years career. If you accept a federal grant, this is nothing new. You accept a federal grant and you have to have a uniform guidance audit. You cannot charge that audit fee against the federal program. Little fun fact.
Right. Although, as they have said, there is an FAQ on that, which I think Nina flagged for me again too. It does say for SVOG, there is an exception for that apparently.
Yeah,
So
Not in writing. Not in writing.
No, it is. It's in an FAQ. Unless
The FAQs, the current administration does not acknowledge the FAQs because they didn't write them. I'm kidding you. This stuff does not. No. They will say, I'm nothing against my previous administration, but I take no responsibilities on what those FAQs say.
Wow. Okay.
So they are releasing new FAQs very soon.
Yes, and that's why they're going to hopefully fix a lot of what I'm talking about.
Right. And then
right? Because and to be honest with you, and this is what I said to you earlier, those FAQs are not federal law. They can't just write FAQs and change federal terms and conditions that the Department of Education has to follow. Right. They're not allowed to do that. And I've been screaming bloody murder about this with the league because nobody's ever been audited on, the shows are, the productions are, so that makes it easy. And most presenters are, but all these people who are, general managers, talent agents, casting agents, they don't have audited statements. Why would they? Unless you have a bank loan. So I've been screaming bloody murder saying your FAQs are not helpful if they don't coincide with the federal registry. And that previous administration would say, it's fine. I'm like, no. And that's why with the PPP2, they had to go back and change the act in order to allow people, SBA could not unilaterally allow people, oh yeah, you can take the PPP2. No, the federal government had to change the act itself and do an amendment.
All right. I want to cede the floor to Robert because he's been super helpful in analyzing and sorting through things. So Robert, take it away.
Waiting is maybe a better way to put it. Thank you, David. And thanks to all of you for all the help on this. The topic that I wanted to open up has to do with compensation to owners. Now I'm a single member LLC, which is essentially the same as a sole proprietor. So it's Schedule C, et cetera, et cetera. And I did listen to some excerpts from your conversation with David earlier in the week. So I understood that you're not prepared to say whether this will be based on cash draws as opposed to business profit. And I get that. I don't want to.
But I know, just so you know, I've had a subsequent conversation since then, and I did get more clarity.
Yeah.
It's good and bad, and it's not in writing, of course. So I'm hoping to get it in writing. So that tape is a little bit outdated. The bad news, David, is that it's a one-time, you can't do it annually. So if your 2019 income is $300,000, you can't do $300,000 twice. Just because the government period, it's limited to, the most you can use the SVOG money for is what your income was in 2019.
Okay.
So I did check that.
Even
Yeah.
if you get a supplemental for a different fiscal year.
Doesn't matter. You can't, it says you can't use them. The owner can make caps out of this grant.
Huh. Okay.
And so that's only one.
So even if we end up at the net profit number instead of the draw number, we went through that on Monday, and that's what
Right. I also believe, I still believe the intent was to give you, and this is the argument I made after I spoke to you. I said, first off, the intent is what your income was, not your cash. And then I said to the argument, if I'm taxed, I did make the argument. I said, I had control over both bank accounts. Just because I was lazy and left the profit in the S Corp account and didn't put it into my individual account, that should not limit me on what I can take under this grant.
But what you're telling us now, I think, if I hear correctly, is we get to do this one time. We get to make ourselves whole for 1 year. Maybe it doesn't matter which year.
As opposed to 22 months. That's right.
As opposed to 22. Wow, really? Well, that sucks. Okay.
That sucks.
That's bad.
Yeah,
That's
yeah,
bad.
totally does. But wow.
Question. And
Yeah.
that is it, you know, there was the issue about that you were raising about the distribution as opposed to the net profit. Are they acknowledging that the full net profit on the amount of owner compensation?
Yeah. Nina, you are breaking up, but I know what you're asking. You're asking that, that's okay. You're asking that, from my understanding now, they feel comfortable that is what the net income was. For the argument that I made, that right, that you had access to that cash, just because you didn't move it from the right pocket to the left pocket shouldn't matter. And the IRS wouldn't care, by the way. Because I said to them, well, the IRS wouldn't care. That's their first thing about, well, when is compensation taxable? It's taxable when you have access to it. So like clients all the time say, well, if they work, you know, like especially my nonprofit, the executive director all throughout COVID would say, well, I'm not going to take the money. I'm going to take it next year. I'm like, no, but you have control over that, right? You run that nonprofit. The IRS is not going to buy into that. You have to either forgive it or have a new contract. You can't just say, oh, I'm not taking it and it's not taxable. They don't care, even if the nonprofit kept the cash. So that was my argument about it. And I spoke to 2 attorneys and I spoken to my peers, and they all agree their interpretation is, and we all went back and read it again all together, because this is a big issue for everybody, not just your industry, obviously, right? They all believe it's, if you read it, it says the grant will pay for a maximum of your 2019 income. They didn't say you can prorate it over the grant period. They said a maximum of. So that's why I think you got one-time shot. But 2 bad news, 2 attorneys said to me, and it's capped at 100,000. I said, it does not say, I know, that's what I said. It does not say that. And this is 2 attorneys that work with SBA. And I'm like, it does, show me where in black and white it says that. It does not say that. PPP 1 and 2 absolutely said that. The employment retention credit did not say that. They said you just couldn't double, you know, you had to have $105,000 of compensation to get the PPP 1 and the $5,000 employment tax credit, right? So I said, there's nowhere, there's no comma, the lesser of, there's no mention of it.
Good.
So I just throw that out there because keep trying, as Martha said, if you want to be conservative even with yourself, maybe take the 100,000 and leave the money in the other bank account. Don't take it and spend it until we have clarity, hopefully very soon. Because again, I don't want you, just like you said, I don't want to give it to the artists and ask them back. I don't want you to spend it and think you have to give it back either.
Right. But I think what you're saying is we could make our employees whole for the entire period of the grant, but not
If
us.
they were providing services,
Yeah,
if they
sure.
were laid off,
Yeah. But
They can't.
this, no, you get, but that, I mean, can we agree that does not seem fair or right? I mean, the owner of the business.
well, they're limited to 100 grand too.
No, I understand that, but
That's the position.
but they are limited to 100 grand over 2 years, you know, if necessary. We could top them on, you know. Whereas it sounds like what you're saying is the first time I've heard
Well,
this.
that's why I said, I don't think it's capped at the 100,000. I think it's capped at what your compensation was in 2019.
Right, but
I don't
only
agree with
for
the
1 year.
100,000. Yes, I don't agree with the 100,000.
Right.
But, well, and the reason is, I think that was in my mind, that's what I said. I think that's their way of capping it, right? Because it is a 22-month period. They're only allowing you what you made in 1 calendar year. In my mind, that is their way of capping it. Not capping it at 100, but saying you can't take that money and prorate it over 22 months.
Right.
Again, we better get clarity because I have all owners freaking out over this.
Yeah. Now, building on that, I mean, I think to me, I follow you on that. So let's say that amount for 2019 was $100,000. All right, let's just use that as a number.
You want to use 100? Okay.
Okay. How about if I use 90? All right, just so that it's very clear. All right, I'm going to use 90. All right. So the owner's line 31, Schedule C says $90,000. All right. Now, you have said that, so the maximum that owner could take using SVOG is 90, but you also have to deduct PPP and all that stuff from that?
Well, here's the thing. They were supposed to deduct PPP 2 from your second, from SVOG. PPP 1 was excluded from SVOG. They said you could take that money, it doesn't affect your SVOG grant. But we all know you can't double up federal money. You can't have a federal agency pay you twice. So yes, it's our opinion that you have to deduct. If you got PPP and you allocate it to your own compensation, you have to deduct it.
So all of that has to be deducted. So PPP1, PPP2, and EIDG, you know, for that $1,000. In my case, I got a CARES.
Did you do the employment retention credits?
No, I'm a one-horse show.
Okay.
So I don't pay anybody else.
No, you don't qualify then.
Right, I didn't qualify. And I also got a grant from New Jersey from the Economic Development Authority, which was supported by the CARES Act. And so I think that probably has to come out too.
If it covered your compensation, if you reported back, again, just be consistent. Yes, you would. If you specifically are telling them it's covering owner's compensation, yeah, you can't double dip.
Right. Now, one more thing.
The only thing I'm going to interrupt you.
Yeah.
I know everyone laughs when I say this, but you shouldn't be making money off the government, right? So
No, I get it.
So,
I get it.
So I know people are like, why not? And I'm like, no. You spend $1, you shouldn't be able to collect 2.
I just want to know what the rule is.
You were absolutely right. You were absolutely right.
I mean, what else can I do at this point?
Yeah.
Now, the last thing, that question that I have in this specific area is, what about? I mean, do you also have to make any kind of adjustment for what you earned despite COVID?
No, my understanding is David. That's a little bit. My understanding is you can pay this grant as long as you don't use another agency's money, right? You can pay like PPP1, PPP2, like we're talking about. You're allowed to cap yourself out for 2019.
Mm-hmm. So in my hypothetical case of that owner with the $90,000 and got between all those various other forms $45,000. Okay, so that leaves $45,000, and so that owner could take $45,000 from SVOG, and that's the end of the story. It doesn't matter if they actually somehow managed to make some money in 2020 or 2021.
I don't see anywhere in the act or FAQs. I don't see ever SBA saying, oh, and by the way, you got to deduct what your current revenue is. There's never been an attachment to that. There's never been a discussion about that. But I agree with you. It seems weird that they didn't, but to be honest with you, they never said to anyone who got paid a PPP1, PPP2, that you had to deduct income from somewhere else. If somebody was getting paid from somewhere else, they didn't do it for PPP1 or 2 either.
Right.
Right? They just said, we will only pay for 100 grand. They didn't, so I don't know if you make 200 that, like, again, I use my nonprofits only because they're used to being audited, right? So you have somebody running a nonprofit like CTG, Center Theater, right? Gets paid, and this is public information. You can look up their 990 and know how much they make. I'm not talking on the term, but certainly they make $500,000. They might even make more. I have to cap that. I can only use PPP1, PPP2, SVOG, and the ERTCs up to $100,000. They don't care that the person got paid $500,000. I just got to use somebody else's money to pay the $400,000.
Right. I get that.
So isn't that the same as you guys? If you're going to pay yourself, right, that grant, I don't care necessarily that you made money else.
Okay.
You just can't use the SVOG money to fund it, right?
Right.
If you don't have
We
that
got to deduct PPP1. I knew we had to deduct PPP2, but 1 also?
Yes, absolutely. Yes. Because PPP1 paid for, in theory, 2019's compensation. That was the whole point of it, to make people whole that weren't working because of the federal shutdown. That was the whole point of PPP1, is to pay people to stay home because they have to, that they can't come into the office or whatever and work. And that, and certainly in the theater, there was no live presentation.
With the paying 2019, the costs incurred begin March 1. So that means 10 months of 12-month period. Does that mean that you can only pay yourself 10 months of your full salary?
No, because they won't let you. There specifically says that the grant will pay for a maximum of your 2019 business income.
Okay.
Doesn't say it has to be prorated. It doesn't say anything, because again, they're not giving you 22 months either.
Yeah.
Right.
And then the money that was received through PPP or the New Jersey grant or something like that, let's say it was all limited in 2020, and you don't reimburse yourself any of your salary for 2020, but is it possible to apply your SVOG 100,000 cap or whatever your net profit was, whatever it ends up being, and apply it for 2021?
No, because they're saying the maximum you can get is capped at 2019 income, less other federal funds that paid for that exact amount.
Okay, so they specifically say less federal funds.
Oh, absolutely. I mean, that is clear. You can't, it clearly says you cannot use money that was paid for by PPP.
And then I'm going to hand the table over. My last question is it per grant? So in other words, could the supplemental grant create a new opportunity to get another?
It doesn't say that under the act, but the act did not specifically address owner's compensation either. So this is all interpretation. So that was, we'd have to push SBA saying, look, we're talking 2 years now, right? So how could we cap it at 1 year? So that's where the pushback has to happen. It's silent. If you read the 23 pages of the act, it does not talk about owner's compensation.
Okay.
This came up, again, to be honest with you, because we were so involved with Schumer's office, the theater industry, through the Broadway League. And when they said that producers and general managers and casting agents and talent agents can all apply for this grant based on, this is where it got ugly for us, based on either what their K-1 income said or their Schedule C. And we said, well, we have certain producers who could cap out the whole freaking grant based on what they made, and right? I mean, in certain presenters as well. And they said, that's not appropriate, but technically, yes. Technically, you could write a check, right? If they don't, doesn't say that you can't. So it gets into that. So we beat this one. That's why if you notice the FAQs has a whole, because we kept coming back at them going, no, clarify that. Is it the K1 income and Schedule C? Yes, the K1 income and Schedule C. Okay, because we know I don't think they understand what that means sometimes. K1 income and Schedule C income, because they don't do tax returns, right? So we made a point. That's why that FAQ section is so detailed, because we kept going, wait a second, because our entire industry is filled with those people.
Right. So can I super quickly?
None of which were on salary.
What's that? Yeah, right. Can I super quickly walk through a alternative scenario, just because then it takes us above the 100,000. I just want to make sure I understand it correctly. Basically same as what Robert just went through, I think. Let's say the 2019 line 31 Schedule C was $300,000.
Right.
Hypothetically. Now, let's say you took a PPP one for $15,000. We're talking about 2020 now. And, you know, 15,000 of compensation towards you, that's based on $100,000, right? Yeah. And let's say you also claimed unemployment, you know, after the PPP loan, because you needed to do something because nobody knew this was coming. So you took whatever, you get 30,000 of unemployment, making numbers up here. So,
but owners can't get unemployment.
Oh, they can. They could under PUA. Yeah, they could. Under the pandemic unemployment.
Yeah. Okay. I'm thinking under normal circumstances.
No, normal.
You're saying last year in 2020, you actually got whatever.
Yeah, we could. We could. So now let's just say the math is really quickly. 300,000 was your original line. You deduct the 15,000 from PPP, deduct the 30,000 from unemployment, pandemic unemployment. Okay. So that's 45. You're still left with $55,000, right? That's you.
Did you get PPP 2? If you got let's say you got PPP 2.
Okay, so deduct that 2.
You'd have to deduct.
Okay, fine. So now whatever you're down.
Let's say that's 15,000. Now we're at 60,000, funded by federal agencies.
Okay, right. So you're at $240,000 for a 12-month period, right? Mm-hmm. Is it your opinion that is the amount that an owner could claim from SVOG funds under this program?
Yes, that's what it says, that you can you cap out at your 2019 income less any other programs you received that funded it. Yes.
Right, but the new part of this is it's for 1 year. It's a 1 year.
Right. That's right. And the other thing too is where I had these people say to me, no, you're cap out at 100. I'm like, that's not in writing. But I just say it to you to be conservative now. But that's not my opinion. My opinion says, and the FAQ says, if you go back, capped at 2019. There's nothing about 100,000. There's nothing, and it's not salaries. That's why we kept pushing back and explaining to them. It was through the Broadway League, by the way. The Broadway League kept saying to them, we'd have these conference calls. They're not on salary, right? You know, it has nothing to do with salary. This is the net profit that flows through on their bit. Yes, we get it. Okay, you get a K1 from a show. That's a net profit. You're a producer. You're not an investor. You get a K1 because you are sharing in the income, but that's to pay your services. That's just how we do it. It's not on W-2. We get it. Okay, that's what we kept beating them on because we were like, really? Okay.
If I can, I just want to jump in with one question, because if what you're saying is correct, I have given hundreds of people incorrect information in other agent and managers. You are saying that every agent and manager who took the numbers from their 2019 tax returns for salary and draw, if they happen to be W-2 with their own company, S Corp, C Corp, whatever, placed those numbers into their budgets and were approved at those numbers, even though they may have received PPP-1 and
they don't know that you're not paying other people. They don't know it's just you on your budget, right? You just
they had our tax returns and it showed.
Doesn't matter. The budget is what I'm spending today. They don't know that you don't have 2 people working for you.
Got it. So long story short, if the company is owners only and they put those numbers and did not reduce those budget numbers for PPP, for unemployment, et cetera, their budget is currently incorrect.
Yes.
Thank you.
No, it's the budget thing is, I have to be honest with you, the budget thing's a mess because they didn't do any due diligence on the budget. You told them what you were going to spend it on, right? Knowing that subsequently you have to be audited either by them or by the outside CPA, depending on how much money you get. And the only thing I am going to say to you, I'm not going to be very popular, but for everyone I have spoken to, for an S Corp and a C Corp, you're limited to 100,000 if you're paying yourself wages.
I think
If
the
I can just, okay,
go ahead.
That's,
quickly
that's,
ask,
again, I can't point to you black and white, but this is what I've been told. It's, oh, well, an S Corp, wait, you're getting a W-2 from an S Corp or a C Corp, you're limited to 100,000, that's salaries. No longer is it business income. I'm like, well, that's not fair, right? Right, that's not fair because you're cutting yourself a salary because you're forced to, and then you still have net income. That seems wrong to me, but that is what I've been told.
so just
Again, this all has to be clarified. It's a mess. It's a mess. It's not, and not saying this grant is fair, by the way, either.
Laurel, go ahead.
okay. So just quickly, just to understand, because we're a similar situation as Robert. So we're a sole proprietor partnership. Our business shut down. Fine, as far as if we're to reference the Schedule C and what our earnings were, okay. But since March of 2020 through now, we have been shut down. So we have not earned, nor were we able to pay ourselves. We pay ourselves draws, like I think similar to David, or we pay ourselves draws. No draws were paid to us. We did have to take unemployment. We had to take out a loan. We had to cash out money. So are you trying to tell me now that I have to deduct the unemployment that we took, which, we didn't even pay ourselves. The company was shut down. So the only way we could survive and put food on the table was through unemployment as individuals. But our business had to take out a loan and had to cash out personal money to just survive. So
I understand what you're saying, but I don't think you're hearing what I'm saying.
well,
You're capped out for 2019 income from
Yeah.
all federal funds. Why should SVOG give you the unemployment you've received?
because the company, I couldn't pay myself. Well, the company could not survive. Now the
But,
company
but
would
wait,
have.
but the unemployment was supposed to go to you, right? So so
But-
why should you have to? That's doubling up, right?
No,
No,
well, I don't
We
think,
go off unemployment.
Course it's
because the
doubling up.
company
if you're getting paid,
is not,
so, like, use the example that David said. You made $300,000 in 2019. You got $75,000 in unemployment. SVOG will give you the difference to make you whole. They're not going to give you the full $300,000 because you collected $75,000 in unemployment. Am I misunderstanding what you're asking?
well, it's, okay, we're small business, we're really small business. I'm not talking the hundreds of thousands of dollars here.
We're talking 30.
So
No,
I'm
but-
talking 30,000, but whatever.
But again, if
The-
you made 30,000 in 2019 and unemployment gave you 30,000, why should SVOG give you? Then you'd be making money.
Because I
on
have
federal-
not, because as far as generating money and keeping my business open and the work that I have to do to even start generating those tours again, and there are still travel bans occurring. So my business can't even operate. So, and the unemployment is going to run out anyway. So the business as far
they're
as
making
keeping
it
up its
whole.
utilities and keeping up its business expenses,
But wait,
we
your
have to
business
cash out
expenses-
personal money to survive. So
But
I
SVOG
don't
will
understand.
pay for, we're just talking owner's compensation net, right?
Yeah.
So your net income is $50,000 in 2019.
Mhm.
Okay, because they're doing pre-COVID. They're saying, we want to give you pre-COVID amounts. So if you
Sure.
made $50,000 net in
Mhm.
2019, but unemployment gave you 40,000, you
Mhm.
can only take 10,000 from SVOG. But any other expenses that you paid from March 2020 through December 31st, 21,
Mhm.
rent, utilities, that can still go against the SVOG. We're talking owner's draw versus expenses.
I got you. So that means that we just have to reallocate our budget. What is
That's
sad
right.
is that it was
Maybe
not
that's it.
clear that the payroll was actually based on that, because that would have been most helpful, because we were guessing as to, okay, well, our business has been shut down since March of 20 through till God knows when. I mean, maybe 22, I mean, right now, but
you
whatever,
put all
I mean,
the
so
expenses on line one.
we didn't go crazy as far as 22. I mean, yes, again, please
yeah.
understand, small, but anyway, we did allocate, you know, a portion on that payroll. However, like you say, I mean, as far as those other expenses, obviously
They'll
we
pay
could
dollar for dollar.
reallocate, because we did not necessarily, we weren't able to put all the expenses. So, and the expenses, however, are indeed from March 20 to December 21. That is not on a 1 year, that's not on 2019. These are real costs, right? Okay.
Yes.
So now it would be a question of redoing or readjusting our budget. And then obviously, I guess explaining that, because we're just getting a one disbursement, we're not, again, in that range of getting 3 disbursements. So
do a budget modification, put the rent, the utilities on those separate lines. But here's the thing and I agree with you in one sense. What's inconsistent is they're giving you the one-time 2019 cap.
Correct.
And whereas I can pay a salaried individual for 22 months, but it caps at 100,000. So in a sense, like David's example, you're getting 240,000 once. Salaried employees are only getting 100,000, well, 183,000 max. That's if they made over 100,000. So I think that's what the rationale was, is that that's why I said they can't possibly cap at 100,000, because you're only giving us the one payment for 2019. So it's not logical to say, and it's capped at 100 grand, unless you're going to say it's 100 grand for 22 months. You got to be consistent like you are with salaried individuals, right? But that's all I'm saying. They don't want to pay for owner's compensation through a PPP. They're not going to pay for the same dollar twice.
No, that I understand. And of course, we didn't qualify for PPP because we're sort of like Robert, we're just self-employed. We're just 2 people. We don't have employees. And we're not like David yet with Ariel or paying. So that I get. Okay. But my question was, because that obviously does change considerably. Anyway.
Yeah, well, and again, though, keep in mind, you do a budget modification today. Let's send it, they will wire you the money in theory. This is what they've been doing. They'll wire you the money next Tuesday. You get the full amount, right? You have till December 31st, 21. Since this grant covers a whole host of expenses that you're not limited by, right? Not like PPP where only 40% could go to rent and utilities and all that nonsense. This grant doesn't say that.
Okay.
So you could do another budget modification before you actually, after December 31st or up until December 31st, if things move around. Nothing stops.
Well, definitely we'll have to adjust our budget allocations, because that would have saved a lot. But anyway, and so what is the recommendation, and when do we submit this budget modification? Do we do it at the end in December when we've dispersed everything, or do we resubmit?
Well, you have to do one now because, they're giving you more amounts than your grant application had. So they will not give you the grant Isn't that what most people on the phone?
No,
there are a couple exceptions that are just.
Oh, okay.
They actually told us, they actually came to us and said, no, you're eligible for this amount. And we actually resubmitted a new budget to them.
Okay.
And they actually wired our money yesterday, as a matter of fact.
Perfect. So you're the example that I said. So I would not do another budget modification until later on. So to wait and see what you actually spend it on, wait and see what the literature comes out and says. I would not do another budget modification now. We've already done one. Yeah. Yes,
so we'll breathe.
And waiting. Martha, go ahead.
Really quick. I just want to make sure I understand. Stupid question. So we have to spend this money by the end of December, but you keep talking about 22 months and that's over my head. What am I missing? What's 22 months?
Well, there's 10 months in 20 and 12 months in 21.
Got it. So I can go back and pay for stuff that I found money for by borrowing.
I don't care. If you paid for it already, you're basically getting reimbursed. You have to submit those bills now and SVOG. Yes, that's the point. That's the beauty. So people keep saying, I keep saying to everyone, don't focus so much on the owner's compensation stuff. It's basically reimbursing you for past expenses, which will go to your pocket. And by the way, tax free. This income
I'm
is
gonna
not
cry.
taxable. Right.
Okay.
So that's my point. Because everyone keeps wanting to, their knee-jerk reaction is, I want to put it to payroll. I want to, like, no, put it for all the expenses that are other than payroll, especially then we don't have to talk about the unemployment. We don't have to talk about PPP 1 and 2. Put it all towards, exhaust as much as possible for anything but payroll. And by the way, health insurance is not capped. Pension payments are not capped. So if you paid health insurance for 22 months, that goes on, that's a fringe benefit, goes on a different line, has nothing to do with it.
That's great.
Unless you allocated PPP 1 or 2 against it. I mean, that still counts. Anything you got funded from PPP 1 or 2 cannot be under this grant. So if your rent got paid by PPP 1 or 2, again, you can't double dip with a federal agency.
Presumably, I can't pay my mortgage for this. I mean, I work at home. That's not business rent. Well, for my office space, right? But I can't pay my mortgage out of this, can I?
You can't pay your mortgage, but you can pay what you reflected as rent on your Schedule C if you did.
Got it.
Most of my clients, to be honest with you, what I always told my clients, just so you know this for the future, I know it's like, but I always said do a lease with the company and yourself, because then with the IRS ever audit you, knock on wood, you had a lease, you honored the lease. And honestly, for tax purposes, it's like a wash almost. You just save on the FICA and the Medicare, the self-employment tax. That's the only reason people do it. But now I'm saying to people, well, if you put rent on there and that was deemed the fair market value of what you use for your business, you should be able to reimburse yourself. The thing is, you're going to have to make up invoice for rent. And they might ask for a lease that you might not have.
Right. Business use of home doesn't qualify.
Manuel's been waiting. Manuel, go ahead.
I have an odd question. Is there, since they set it up originally that we had to submit all these budgets and numbers and everything else, and then they decided they couldn't figure out what we did and how we did it. So they said, okay, we're going to go with your tax return.
Right.
At which point, we've got two groups, basically. One group that collects all the fees for a performance for an artist, including commissions and performance fees, the whole works, and shows a real nice big number on their line 1. We have others that do not collect the artist fees. They have the presenters send the artist fee directly to the artist, 1099 the artist. And so their number for these people is much smaller, like 1/5, 1/4 of what the other group is getting. We've kept saying it's not fair. Is there any way at some point to say, look, what about those people, because they have no money to help their artist out just because you did an arbitrary switch and bait and switch on your tax return calculation?
Well, no, because what's happened, so step back a second. If you got the net, that you only got your commission, let's use Center Theater Group as the presenter, okay? Center Theater Group paid $80,000 to your client, and they sent you $20,000 because you were entitled to 20% commission. Okay. Let's just say, just trying to do round numbers, to be honest with you. I know maybe it's 10,000 and 8, whatever the case may be, right? But you get what I'm saying. They sent you the 20%, and the 80% went directly to artists. CTG got SVOG. They're going to potentially pay the artist now $80,000.
Yeah, but no, our artists are a string trio that's a faculty member at a university or a solo singer with a pianist. They don't have.
Right, but if they were contracted, so here's what's happening, because I handle Center Theater Group. So what's happening is all the presentations they had to cancel were their expenses. They're now submitting under their SVOG. No different than the talent agent who did collect the whole amount and is now paying the artist for the canceled performance.
None of our presenters are submitting anything on our behalf or offering us anything.
It's not on behalf of you, it's on behalf of your client.
they're not offering it to the artist.
But in
Well,
the,
it
what
could
the-
be because, you know what, Century Theater Group budget is far in excess of $10 million. So they can pick and choose what expenses they want to allocate it to. You're right, those people will suffer when they can pick and choose what expenses they want to put it towards, yes.
I think though, the real net of what he's asking is there anything to appeal back to SBA to say, you're treating these talent representatives differently? And is there a chance for those that didn't do pass through? Okay.
No, I don't think so, because we ran into this again with several industries, especially the museum industry, because the way tax returns are done is netting some items. And you still had to collect it. That was the key here. You had to collect the earned revenue. If you didn't collect the earned revenue, then you can't count it towards your grant.
And one other scenario of talent representatives is they collected the revenue, but they showed their gross income less those artists.
Oh, so if they did collect it, yes, yeah. I have exactly that person who wasn't a client of mine came to me because of SVOG. I looked at their tax returns. The IRS has clearly said, you are supposed to reflect the gross and then the expense, right? Some people netted it, which was incorrect, and I'm telling them to amend their tax returns.
And then make a case with SVOG to get more?
Yep.
Okay.
Yep. Because same thing, we had the problem with advanced ticket sales on the theater with the productions. I don't know if you know this, but in our business, the theater holds our advances and only pays us when we have the performance. They're the fiduciary holder of the money. So obviously everything was canceled. When we could count that as our earned revenue just because they didn't remit it to us under SVOG. So that's what made me with the talent agents and the museums and everybody say, well, then hold up. Why can't we do this if they, reflected it net and they represent to you? The thing was, what you really should do is go back and say, if you've already applied, and say, I netted things I shouldn't have. Can I provide you now with the gross amount, and will you give me the higher amount? That's how I would present it if I was going to do it.
Okay. Thank you. I think we're going to wrap it up here. Is there any burning last question? Okay, Karen, you are amazing.
Oh, thanks.
Absolute gift to this field. Thank you so much.
Thank you. Oh, you're welcome. Just let me say one last thing.
Yes.
We send out blanket emails on this stuff to all our clients. I'll add you onto that list so that you can then funnel it through.
I so appreciate that. Thank you.
Okay, no problem.
Okay.
Right. Thank
Bye.
you so much. Take care, everybody. Good
Thank
luck
you.
with all of this.
Thank you.
Thank you, Dave.
Thank you.